you all noted that companies are looking to reduce their physical footprint. And that's something we're seeing actually in this deal. They're saying that they're going to have annual cost savings of approximately 480 million. And a lot of that is their real estate footprint. Is that what, are you seeing that across the board, even for companies that aren't involved in any M&A?
Yes, Jen. Hi, nice to see you and Adam again. Yes, we are seeing this shift, and I think one of the interesting results that we had out of the FIS Readiness Pulse survey, we did two snap surveys of 250 executives across both the sell side and buy side firms, and we did that in May and September. And during that shift, we saw that the number of firms who reported that they were actually considering longer term work from home for their employees went from over 30% to 60%. So it almost doubled across that period. And I think it's interesting how the dynamics of how firms are going to be able to leverage the workspace they have for different types and styles of activity around face-to-face meetings for innovation and other purposes.
When you do this survey, though, you also found out that there is an expectation on the part of the firms for greater investment in cloud services and managed IT. Is it going to be a huge spending spree as we go into 2021?
I'm not sure it's going to be a huge spending spree, but what you're definitely going to see is the way firms allocate capital towards investments that are going to really differentiate them from a business standpoint. So things like digital access, digital capability, opening up data for their customers are all going to be things that I think are critical for these organizations going forward, and which they're telling us that's where they're going to spend. What they're then trying to do is look at stuff which is mission critical to their business, but it doesn't differentiate, and looking to outsource that, either cloud services, as you said, or business process services to other organizations such as FIS.
Are there any concerns out there about security one way or another? I mean, these are businesses that deal with a lot of money. Also, look, I mean, there have been firewalls on Wall Street where they don't let people get on LinkedIn. Now they've had to open up everything and say you can take your iPhone and help close a deal. So is there a risk to this at all that you see?
I think it's not so much a risk, but there's definitely firms are now telling us, and there was an increase over the survey we did in June versus September. They are now telling us that they're increasing the amount of spend and investment around cybersecurity and other areas of their business. I think it's a combination of an increased workforce working from home and just a general trend that we've seen across the market, to your point about different threat actors that are out there and the need to really heavily protect the business that they're doing with their clients. So yes, there was a definite increase during the 5 months that we did the survey across.
Well, when you look at some of the deeper dive in the data, though, it's the actual employees and retaining those employees as to why we're not going to get this mad rush back to the office, right?
Yeah, that's a critical factor. When we looked at the detailed data as well, Adam, I think what we discovered was that the combination of cost advantage from an economic standpoint, you mentioned market earlier on, and the reality of attracting and retaining a generation of talent that, first of all, during the pandemic has become used to a different style and work method of working, but also just expectations through a generation that's coming into the businesses really expects to be able to have the flexibility to enable them to be there, present and not present, depending on the activity that's going on around them. So I think it's a fundamental shift from both an individual human standpoint as well as firms and how they view the ability to run their business, which, by the way, has been exemplary during this period of working from home.
When you talk about a new generation and the flexibility that they desire, in tech, we've seen talk about being able to move places, but having your salary adjusted. Do you think that that can happen in this space as well?
I'm not sure. I mean,
And
in the
adjusted
sensitivity.
downwards.
Yeah, no, I got that. Yes, I'm not sure that the sensitivity is such that we're going to see that as a major advantage from a business standpoint for firms, that we deal with. But I do think, that there's definitely an opportunity to think about, well, where are people located, and can they be located, and are they prepared to trade off one versus the other? It isn't something we saw from a data standpoint at the moment, though.
All right, Martin Boyd, FIS Capital Markets President. Thanks so much for walking us through some of your results of your most recent survey.
Great. Thanks for having me on.